In this part, I'll be discussing a question, and this question is regarding the creation of DRR and also in regards to redemption of debentures in a method where we do not have sinking fund. Okay, so this is what this video will be covering. So let's see this question. The question has stated that there is a company, R Limited, which has issued 42,000 7% debentures of rupees 100 each on 1st April 2012, which is redeemable at a premium of 8% on 31st March 2018. So that means after 6 years, it is going to be redeemed at a premium of 8%. Right now, the company has decided to create a DRR on 31st March 2017. The company invested the funds as required by the law in a FD with SBI on 1st of April 2017, earning interest 10% per annum, and TDS means tax deducted at source by bank on interest is at 10%. So first of all, we will start with the journals, and the initial stage is about regarding the issue of debentures. So issue of debentures. Okay, so let's prepare this journal. So in the books of what is the name of the company? The company's name is in the books of R Limited. So in the books of R Limited, the debentures were issued on 1st April 2012. So date column, you can write 1st April 2017. So on 1st April 2017, what has happened? They have issued debentures. So when issue of debentures, first of all, you receive application money, right? So bank account has to be debited to this is 7% debenture. So 7% debenture application account. Now we are receiving application for 42,000 debentures at rupees 100 each. So this will amount to a value of total of 42 lakh rupees. Correct? Now, after this, the next thing that we need to do is we need to transfer this application money to our debenture account. So that entry is going to look like this: 7% debenture application account debited to 7% debenture account. So 7% debenture account value will again be 42 lakh rupees. No changes, no premium, no discount. So no other entries are required in this. Now, also in the question, if you see, it is stated that these debentures are redeemable and it is redeemable at a premium. So whenever debentures are redeemable in the future at a premium, that time we need to make an additional entry. So what is the additional entry that we need to make? So this is the first entry we made. Secondly, for transferring of application to debentures account. Thirdly is for the premium that is to be paid on redemption. So loss on issue of 7% debenture account is to be debited, and on the credit side will be your premium on redemption of debentures account. Now, what will be the value for this? it has been stated in the question that these debentures will be redeemable at a premium of 8%. So 8% of 42 lakh rupees. So if you calculate this, 8 by 100 into 100 as valuing at 8 rupees into 42,000 should get you a total of 3 lakhs 36,000 rupees. Correct? So till now we have this up till now whatever we've done, this covers your part for the issue of debentures. Now further moving towards the creation of DRR, what has been stated in the question is the company decided to create DRR on 31st March 2017. The company invested the funds as required by the law in an FD with SBI on 1st April 2017. So as the law states, okay, every company, okay, if it does not have a sinking fund. Now see, like I said earlier in the previous part of the video where I had explained what DRR basically is. So basically DRR is a fund that you are setting aside for the repayment of the loan that you have taken. Now see, the law states that at least 25% of the value of the debentures should be created as DRR. Okay, that is what has been stated as the minimum criteria. But the company, what they can do is they can create this DRR up to a full 100% also. Okay, if it is that, it's even better, it is even safer for the company, right? The company will not be at loss, the company will be well prepared to pay back its liabilities. Apart from that, this DRR that is there of 25%, it should be created at least 1 year prior. So in this question, 2018 is the year in which this redemption is happening. So this means in 2017, 1st of April 2017, they should be ready with this 25% DRR. All right. That means if the company cannot prepare 25% at once, that means the company has issued these debentures in the year 2012. So this journals that we have should be in the year 2012. So from 2012 onwards up till the period of 2017, in between that they can make multiple contributions as well. Like for example 2013 they contributed certain amount, okay, let's say 10%, and another 10% at 2014, and finally in the year 2017 the remaining 5%. So this means 10 plus 10 plus 5 totals up to 25%. So in this way also this DRR preparations can be made by the company. All right, so coming back to this question, they have stated that this DRR of 25% was created on 31st, what was written in the question, on 31st March 2017. Okay, so like I have also stated that in the previous video, that DRR is supposed to be created out of the surpluses, or let's say the profits that the company has earned. So profits that the company has earned, and using that they are supposed to create this DRR. So let's record this transaction. So they have stated on 1st of April, or sorry, on 31st March of the year 2017, they have prepared this DRR. So like I said, DRR is to be created out of the surpluses or the profit. That means profit or loss account of the company will be debited, and this profit and loss is being used to create debenture redemption reserve. Also, in short form, you can write it as DRR account. Okay. Now, what should be the value of this DRR? As per the law states, at least 25% of what? Of the total value of the debentures issued. So the total value of the debentures issued was 42 lakh rupees. So if you calculate this 25%, 25 by 100 into 42 lakhs, you will get a figure of 10 lakh 50,000 rupees. Clear? Now, this is the creation of DRR. Anytime you are preparing or you are creating this debenture redemption reserve, please keep in mind 25% of the total value of the debenture issue. All right. And it has to be created using the profits of the company. So, profit and loss account will be debited in this case. Then, they have stated that the company has invested the funds as required by the law in the FD with SBI, and it happened on 1st of April 2017. Now 1st of April 2017, it has been stated that they have invested this amount. Now how much has been invested? That is not given to us, which is also provided to us by the law itself. Now it was stated that 25%, so it means total 10,50,000 rupees was set aside as debenture redemption reserve. But this does not mean that this entire amount of 10,50,000 rupees, entire of this amount is not going to be invested. Rather, what we know is that 15% of the value of the total debentures issued, 15% of 42 lakh rupees, this amount is to be invested as investment for DRR. Okay, so this will again, you have to pass another journal entry in which you will be debiting your debenture redemption investment account is to be debited. And since you are sending money to another company for investment, your bank account will get credited. Now if you calculate this value, you will get a value of 6,30,000 rupees. Is this clear? So since although we have sent this money to an FD with Reserve Bank, SBI, State Bank of India, in our books we will be recording it as debenture redemption investment. Why? Because we are making this investment so that it helps us to repay back or to redeem or to do the redemption of the debentures which we had earlier issued in the year 2012. Okay, now after this, now in the year, okay, now you have already invested, okay, you have set aside a certain sum of money as DRR. Apart from that, a certain sum of that amount is already been invested in an FD. Now as the time gradually passes, comes to the year, okay, and comes to the year of 2018, that is, as the year ends, now what will happen? Whatever investments you have made, first of all, you need to get it back, right? Abo, what happens? Now is the time to repay back the loan. That means all of the funds that you've created, whatever you've invested, you need that money back with you. Now, how much money you are going to get back? Now let's calculate that. See, in the question, it has been stated to us that the investments that we have made is earning an interest of 10% per annum. And also it has been stated that the interest on the interest that we have earned, tax has been deducted at the rate of 10%. So how much will be the money that we will be receiving? So that means when you are closing this investment, this particular investment that you have made, when you are closing this, this means you will be receiving money, right? So bank account will be debited. Now how much money will be debited, that we need to find out. So investment made was rupees, how much was the amount? 6,30,000. So 6,30,000 rupees we have invested In this investment, we have earned interest at the rate of 10%. So 10% means 63,000, right? And the total that we have earned out of this would be, if you add it up, so we'll be getting 6 lakhs 93,000 rupees. But apart from this, this entire 6 lakhs 93,000, everything will not be received by the company. Why? Because on this interest that we have earned, a tax deduction at source, a TDS, was charged at the rate of 10%. Okay, so 10% of 63,000 would be 6,300. So we have to deduct this amount of 6,300, and from this you will be getting the actual money that we receive in hand. Okay, the total return after TDS, or tax deducted at source. So if you calculate this, you will get a value of 6 lakhs 86,700 rupees. So rupees 6 lakhs 86,700 will be actually received into the bank account of the company. So 6 lakhs 83,000, sorry, 6 lakh 86,700 rupees will be debited into the bank account. Now this was basically a return of your debenture redemption investment account, which was valued at 6 lakhs 30,000. And out of this we had also earned interest, right? So interest account will also be credited. How much was the interest? We had earned an interest of 63,000 rupees, and deduction at of taxes was also there, TDS. So tax deducted at source account, TDS account, will also be debited by 6,300 rupees. So this is how you will be showing the records of closing your investment. Okay, so this entry on 31st March 2017 is for the creation is made out of the DRR creation is made out of profit and loss. So profit and loss account debited to DRR account. That DRR account, when it is invested, that time what we do is we debit the debenture redemption investment account. All right, and since money is going out of our bank accounts as investments, so bank account will get credited. Now at the end of the period, when we require the redemption money, okay, we need to give back the money or pay back the loans, we require all the funds that we have invested. So closing the investment means you will be receiving money, right? So bank account will get debited. Whatever tax was deducted at source, TDS needs to be done, and your debenture redemption investment account will get credited, and along with that, whatever interest you have earned, interest account will also get credited with that. All right, now after this we are ready. Now we have gotten all the sum, okay, the money that we had was that we need to pay back. Now we are ready with it. So now finally this repayment needs to be done. Now repayment or redemption, as the term we use in this case, basically means the closing down of the accounts that we had initially opened during the issue. So when we go back, okay, if you go back and see the entries that you made during the issue, it basically shows that we have if you see during the issue, what we've done, debenture account was basically credited to represent the opening of debenture account, right? So this means we simply have to reverse these entries. All right, so what will happen is on the closing, what will happen, your 7% debenture account will get debited. What was the value? It was 42 lakh rupees, okay, which needs to be returned. Apart from that, you might have forgotten, in the question it was stated to us that it will be redeemable at a premium, and for this premium we had also created a premium on redemption account which was also credited with 3,36,000. So this amount will also be debited. So premium on 7% uh, debenture redemption account is also debited 3,36,000, right? And on the credit side, what will happen? We will simply this money, everything that is there, it is to go. It's supposed to be going towards whom? It's supposed to be received by the debenture holders account. We need to give it back to the debenture holders account, right? So the debenture holders account will be due with an amount of 45 lakhs 36,000 rupees is the total money, which is the total money that the debenture holders are deemed to receive at the end of this period. So final payment now needs to be made, right? Which will simply be, again, what will happen? Debenture holders account will be debited 4 lakh 45 lakhs 36,000 rupees, and it's all supposed to be paid from your bank account, which finally closes your entries. Now after this, finally what you need to do is whatever DRR was created, that we need to transfer to our general reserve, and for that what will be the entries? Debenture redemption reserve account that we have will be debited, and it will be transferred to your general reserve. The value will be whatever amount we had opened, that's 10,50,000, and this, with this we come to the end, and we have redeemed the debentures and we have repaid back the loans that we were supposed to pay.